afternoon. This is Mr. Not Advice. It is July 14th and Tuesday. This is my end of the day update. As always, it's for entertainment and education purposes only. All right. So we had quite a bit going on pre market today. Bank earnings were slightly better. IBM came out and warned. That slammed IBM down to its biggest loss since the internet bubble popped. CPI did come out and was cooler than expected across the board. Of course, we have the continuing Iran attacking and Trump mouthing off and all of that. We had Kevin Warsh up on Capitol Hill giving his 2 day testimony. Ultimately, today we had a snapback rally. The broadness of the rally was extremely narrow. In fact, Goldman Sachs Prime Desk put overall trading activities today at a 3 out of 10. Overall tape volumes remain light, with market volumes down 20% versus the 20-day moving average of market volumes. Hedge funds today were 7% better to buy, with demand in infotech, industrials, and selling in financials and materials. Long only funds were 8% better for sale, with supply in financials and healthcare and a little bit of demand in infotech and energy. Again, we've got one side selling to the other, but the rate markets were obviously very active, with the rate cut odds crashing now today, this morning, after the cooler than expected CPI print down to 12%. This is all, by the way, mental masturbation in terms of rate cut odds. Dan Carter, senior portfolio manager at Fort Washington Investment Advisors, noted that today was a broad based downside surprise when it comes to inflationary numbers. Quoting, near term hikes are off the table. The market was fearful of a hot print, so this should be supportive for bonds and re steepen the yield curve. Base case is that the Fed will remain on hold. No rate hike and no rate cut. We'll have to wait and see. I still think we're going to get a rate cut, by the way. So, as is, the market is still priced here, 0.33. That's not the percent. That's how much of a rate hike for one hike this year. And then a coin flip for the second rate hike. I don't think we're going to get 2 rate hikes this year by any stretch of the imagination. We had crude here, stocks and bonds decoupled from crude, different than yesterday when it was a sell everything day. So this is good because when you have this lack of correlation, then each asset class is temporarily trading on its own merits. Oil prices, we're always talking about oil prices. Oil prices were up overnight amid the ongoing tensions in the Middle East. We had a little bit of a Taco Tuesday from Trump in that he pulled back from charging a 20%, I guess, transit fee on any ships in the Strait of Hormuz, and instead that it will be called a United States reimbursement fee. Okay, whatever. Trump also noted that oil is flowing like never before. Not really. However, oil was able to stay below that $80 level, which right now is the level at which traders are really focused on. Above it, bad; below it, good. I don't know how to get any more clear than that. Taking a look at stocks, IBM warned this morning. Their warning was due to the fact that their customers were spending more on chips and AI build out, server build out, and therefore pulled back on orders for software as a service. However, IBM is not a pure software as a service company. As we'll see later, software as a service companies did recover from this initial drop down. However, it did reignite the SaaS apocalypse fears with comments around CapEx rotation away from software towards AI infrastructure. And that prompted that 25% collapse in IBM stock, which originally dragged all software as a service stocks lower, but they were more than able to recover and almost get back to break even for the day. Bank reports this morning. We had Goldman Sachs soaring today based on investment banking revenues, while Citibank was the big laggard today. They were actually just slammed today, down 4%, with Goldman up 7.4%. Strength in mid cap or mega cap tech and AI names supported the Nasdaq and S&P, while IBM was the main driver of the Dow's underperformance. In addition, we had in the overnight a rumor that Samsung was in early discussions for a potential share sale in the US, and that caused a little bit of pop in the overnight in terms of the NASDAQ futures market. Then, obviously, when the CPI number came out, it really popped the NASDAQ market. Why is that important? Because the tech sector, especially hyperscalers and chip manufacturers, are very interest rate sensitive because they borrow so much capital on a look forward basis for operations. Breadth was abysmal today as we look at the S&P index relative to the advanced decline line. Okay, it was actually negative advanced decline, which means we had more decliners than advancers, with the S&P 493 basically unchanged as the Mag 7 outperformed impressively after a pretty ugly start today. SK Hynix shares or SK Hynix US ADRs are trading at a 50% premium to their Korean shares. So if you're looking for a price bifurcation or imbalance, here it is. What would this tell me? Either the Korean stock's going to go back up or the US listed ADR is going to come down. That gap will not continue. Gold today, gold was able to reclaim the 4,000 level and it actually tested 4,100 in the intraday. Additionally, we had Bitcoin exploded higher from a 61K handle all the way up to test the 65K handle, which was the highest in 3 weeks. And more importantly, it is back above this 50-day moving average. I think we're probably going to get a little bit of a rally here into the end of July and part of August before we get the final sell off. At least that's what the 4-year cycle boys tell me. And then finally, Goldman's Rich Privorotsky warns watch hyperscaler debt. Well, we're already doing that. The way I measure again is through watching credit default swaps. And actually, as this line goes down, it means it's becoming more expensive, the red line. So it's costing more to insure against the bankruptcy of or the default of hyperscaler bonds. As that continues to go up, down is up here, okay, it means it's costs more. So therefore, investors might demand a higher interest yield, which means it's a higher pass-through expense for the hyperscalers. So watching credit default swaps is an excellent way to tell you what the bond market thinks of a particular industry's debt offerings. And I think this is just starting. I think it's going to continue for a myriad of reasons that I've been talking about. Typically, we have the price of the basket of hyperscalers trades very much in line or very much consistent with the cost of credit default swaps. So if you are a chartist like me, either this cost of insuring against default has got to go down, which here would be up, right? These numbers go down as they go up on this axis. It has to go down, or the price of hyperscalers has to come down. Guess which one I think is going to happen? I think this is going to come down. That's an important number to keep looking at. The overall market today, the EOSC, I was not hoping, I guess. I was wondering, and well, I guess hoping, if we had closed above this high, we would have had a low closed doji. We still have room for a low closed doji because we give it 2 days. One thing I pointed out is this swing low right here, the MACD got this low, a much lower swing low, and yet the MACD was higher. The dip, the trough was not as low as this, when in fact, lower prices usually translate into a lower MACD. This is often a sign of seller exhaustion. Okay. So if we get a close above yesterday's high, which was 441, tomorrow, if we get that close tomorrow, then I will look to trade and do a low close doji trade. Now, historically, this is the trade, this time of year, this setup has been what has in the past led to my large profits for the second half of the year. I don't know if that'll happen. We're going to let price decide for us. I think today was as much of a snapback rally. Probably yesterday was a bit overdone. And if we look at the daily chart today, where did we close relative to yesterday? Well, we closed well above the 50% level, but not at the highs, right? It's an inside day, which means the total range of this candle is completely encompassed by yesterday's candle. So the way I interpret that is, yeah, it's a nice green day, but it didn't make any progress on a technical level. No new decisions were made. If anything, the only decision was made, they were done going down. It doesn't mean that in the future that this price might not start going down. So right now remains, I think, a very volatile time in the market. I think that we're going to continue to see that through the earnings season. And you can see this channel that we've been in since, back May 5th. And we're going to continue to trade in here unless we finally break through this top side or this downside. And quite frankly, I'm really unwilling to take any larger positions until we get a much clearer picture of what the overall market is doing. I think that earnings season is going to be up to, again, hyperscaler chips. Chip manufacturers show excellent product or profits. However, what the market will be looking for is guidance from chip manufacturers, and more importantly, how much it's believable. Just because a chip manufacturer says they're sold out for the next 2 years doesn't necessarily mean they're going to realize all those sales. As I showed you with the cost of credit default swaps rising for hyperscalers, at some point, the bond market, which absolutely dwarfs the stock market, is going to probably dictate whether the hyperscaler stock hit a bump and start going down, or if they're able to get a second leg, because it's all up to the appetite of those corporate bond buyers, whether they still want to keep funding hyperscaler debt. And as I went over in the room and in the morning session, I told my members, what do you have? You've got declining use by US corporations of large LLM models. You have new frontier models out of China that are a tenth of a cost and yet are at the same level on benchmark status in terms of other paid for models. You have token rates, cost per 1,000,000 tokens continues to drop. So the three things, or two of the things that help support or bridge for hyperscalers, the revenue part of the picture, as they build out their infrastructure, are starting to decay. At what point is there a point that the bond market says they're degrading too much? I don't know. I think we're a lot closer than people want to admit. And just as I still think that there are rose-colored glasses when looking at hyperscalers and memory and all of that, I think there are not rose-colored glasses when it comes to EOSC, as EOSC Frontier Power has, I think, pretty much announced the take up of 2 gigawatts for as they originally were contracted and stated they would do. I think there's a lot of good moving parts, small pieces that are being put in place and developing with EOSC. And now, as it always is, it's up to execution and orders. Yes. But these announcements that are coming out of Frontier Power are orders. And one of the things they're able to do, as one of my members shared with me, is they're able to smooth the revenue cycle out. That if there are periods in the calendar when EOSC doesn't have enough non-Frontier Power orders, Frontier Power can step in with this demand and therefore increase the efficiency rates and production levels for EOSC. I think it's a win-win. Will it work? It all depends on the execution now. So technically speaking, the market remains in uncertainty. I think some of my members commented that this market is untradeable. It's not quite totally untradeable, but it is difficult to trade because of the overall day-to-day volatility of the market. We tried to get into 3 different trades today, or we looked at 3 different trades, and we weren't able to enter any of them. But that's okay, because our first rule of trading is protecting capital. Welcome to my new Discord members. I'm glad that you are here. Please let me know if there's anything I can do to help you feel at home and to feel welcome. And for those of you out there that are not members of my Discord, beyond EOSC, we have many other separate chats for crypto, for specific stocks and market strategy. It's a great community. It's free to join. So I would encourage you to reach out to me, DM me, and I'm more than happy to add you to the Discord. Have a great evening, and I'm looking forward to tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different.